But personally, I believe that once those funds hit zero, the Fed will cut back down to zero immediately and restart quantitative easing. And from there, we will see gold and silver catapult to all-time highs on both gold and silver. And from there, the end game should be in sight until and unless the Fed pivots one last time, which it is on its way to doing in the next few months. And I believe it is 2 to 5 months out, depending on the rate that we've seen in reverse repo drainage these past few months.
In a recent analysis, Rafi Farber of the Endgame Investor asserts that the Federal Reserve's much-anticipated conclusion of its rate hiking cycle has triggered a surge in gold, silver, and mining stocks. Farber, predicting an imminent shift to zero interest rates, cites major banks' forecasts, with UBS projecting a substantial 275 basis points of easing from March onwards. Despite a recent dip in consumer price inflation, CPI, Farber underscores persistent inflationary pressures, particularly in key components like meat, poultry, and fish. The looming exhaustion of spare dollars in reverse repos prompts his anticipation of an emergency rate cut and a return to quantitative easing, propelling gold and silver prices to potential all-time highs. Against this backdrop, Farber examines the performance of silver stocks, emphasizing the significance of breaking a recent high for a potential resurgence in gold and silver mining stocks. Like, subscribe, and turn on the notifications bell. To get more videos like this, check our pinned comment for some massive sign-up bonuses with our official partnership deals.
Now, we have seen higher lows because we did hit a low here in late September of 2022. Hit an intermediate low here, and from there we've been seeing higher lows. We've also been seeing lower highs, and that is classic triangular action. If we can pull above this recent high at just under $4 from July 2023, then we can establish a pattern of higher highs and higher lows, which would indicate a new intermediate rally is underway. We hit a low here and what looks to be a yearly cycle low. For those of you who are into cycles, I dabble in them sometimes. We've had a low here in September 2022, another one here, September, October 2023. That's a year, so it's a yearly cycle low. And if we're headed higher, and we do confirm higher highs here just below $4. So if we hit $4, yeah, we're in a new bull market for gold and silver mining stocks. And we had a downside surprise in consumer price inflation, but the embedded parts of the CPI are still very much elevated. We'll go into the owner's equivalent rent and meat, poultry, and fish, which are rising like crazy. Repos that I've been covering every week, those spare dollars in the reserve tank are fast running out. We're down to 944 billion. We've broken below $1 trillion. We won't go above $1 trillion until and unless the Fed pivots one last time, which it is on its way to doing in the next few months. And I believe it is 2 to 5 months out, depending on the rate that we've seen in reverse repo drainage these past few months. But personally, I believe that once those funds hit zero, the Fed will cut back down to zero immediately and restart quantitative easing. And from there, we will see gold and silver catapult to all-time highs on both gold and silver. And from there, the end game should be in sight.
The Silver Institute's latest update, facilitated by Metals Focus, indicates that industrial demand will maintain its dominance in the silver market, playing a pivotal role in the metal's third consecutive annual deficit. Projected to reach record levels this year, industrial demand is anticipated to be the primary driver behind the overall demand, contributing to a slight decrease in total global physical demand to 1.14 billion ounces, marking a 10% reduction from the 2022 record. Despite this decline, the analysts at Metals Focus emphasize that the 2023 figure still stands as the second highest in their data series, reflecting historically elevated levels of demand. The most robust sector of the silver market is anticipated to experience an 8% growth, reaching a record 632 million ounces. Fueled by various factors such as increased investment in photovoltaics, power grid and 5G networks, expansion in consumer electronics, and a rise in vehicle production. However, the report highlights a notable absence in investor demand, which is identified as a crucial element lacking in the market. Metals Focus predicts a 21% decline in physical demand from the investment sector, hitting a three-year low at 263 million ounces. This decline is attributed to weakened volumes in most markets, particularly in India and Germany. In India, record-high local prices deterred new investor purchases and led to profit-taking, resulting in a substantial 46% decline. In Germany, investor sentiment suffered due to the VAT hike on certain silver coins at the beginning of 2023. Furthermore, the report notes that silver-backed exchange-traded funds, ETFs, are contributing to the dampening of investment demand, with this segment projected to experience its second consecutive year of net outflows, according to Metals Focus. Now we'll show you clips of Rafi Farber on the matter, but first, like, subscribe, and turn on the notifications bell to get more videos like this. AMP, check our pinned comment for free $20 just for creating an account in Bybit with our partnership promo.
I'm going to share here is an article from Bloomberg. UBS strategists see far deeper Fed rate cuts than what markets are pricing. Strategists predict 275 basis points of easing starting in March. Anticipate U.S. sliding into recession by second quarter. UBS is the bank that bought Credit Suisse, the dying mega bank. So it says here that the Federal Reserve will cut interest rates by 275 basis points next year, nearly 4 times more than what markets are pricing, strategists at UBS Investment Bank predict. We don't see the conditions for why this time is so different. But Wedja, he's a UBS guy, said in an interview at UBS's London office, inflation is normalizing quickly. Yeah, not really. We'll get into that in a second. And by the time we get to March, the Fed will be looking at real rates, which are very high. UBS's forecast of almost 300 basis points, almost 3% in rate cuts for next year. Let's go a little bit into the CPI from this week, and we'll see that the really important parts of it are pretty stable to rising. So yes, we do have an overall fall in consumer prices, price index acceleration, like a deceleration, not falling prices, obviously. But the most important parts of it are still rising strongly. We have here meats, poultry, fish, eggs. They are rising the fastest since May 2022, 0.7% for the month. The last time they rose that fast was in May 2022, when consumer price inflation was hitting its highs across the board. So here I've pointed out what is happening on a year-over-year basis for October. In October 2021, we were up about 12% year over year from October 2020, which is around here. So that's around 6-7%. And from there, we went up 12% above the 7% that we already had gone from 2019 to 2020. And then from 2022, we're up another 8% after another 12% rise in 2021. So here it looks pretty moderate, right? 0.4%, but it's 0.4% rising above the 8% and the 12% and the 6% from the past 3 years. I mean, these prices just continually go up. They never, ever fall. If we go here, you can see that the most stable and the bedrock of the consumer price index, the CPI, is owner's equivalent rent. And we look at the year-over-year increase in owner's equivalent rent here. Owner's equivalent rent, it's not a thing that really exists, but it is extrapolated by homeowners. They're called up by people at the Fed and saying, what would you rent your house for? What do you think you could get for it if you were renting it, even though you own it and you're paying a mortgage, and they give you like a shot in the dark?
Do you agree with Rafi Farber in today's show? Do you think the current U.S. debt crisis will implode and destroy the dollar? Post in the comments section down below your honest prediction for the forward year, gold and silver prices, and send this video to someone who hates Bitcoin. Like and subscribe to let us know you like the video, and I see you next time.